Hello and welcome to CryptoWeeklies. In this video, we are going to analyze Cardano and its token ADA. None of the content is financial advice. Over the last 24 hours or so, ADA has been the largest performing crypto, up by about 11.20%. Over the last 7 days as well, number 3 spot up by about 18, almost 19% over the last 30 days. Again, in the first quartile or the top quartile, up by about 25%. Over the last 90 days, a similar story, but again slightly underperforming its peers, but still up by about 23%. Right now the price of ADA, if you were to check over here, has pulled down from that $1 high that Cardano had yesterday. If you were to look at the daily price close not close, the daily price highs at around $1.03. That was yesterday's price, but there was a correction in the crypto market and the wider macro asset market. Now the prices are at around 95 cents. Again, still slightly above the 0.23 fib level drawn from the 2021 highs to the 2023 lows for ADA. Again, you can check over here. The drop for ADA came early on in the cycle. The lows were run sometime in June 2023 and drawn from the fib levels that peaked early on in the August of 2021 for ADA. ADA peaked on early on compared to the October-November rally that most of the other major cryptos had. So what are the levels to look for per the Fibonacci analysis? You can see there is a trend from March 2020, February, March 2024, where if you were to slightly approximate it, the March rally did go close to the 0.23. The December 2024 rally did go to, I'm talking about 24 right now, to 0.382 at around $1.33. Potentially this time around a 0.5 fib level, coming in at around $1.67 without a euphoria in the market. And if there is a euphoria case under the all-time high, that is, if the altcoin, that is the ADA altcoin, if does not break the previous all-time high, that is in 2021, which would be kind of disappointing, but considering that it has been around for 2 cycles, in 2017, the all-time high was at around $1.28, which got successfully taken over in the 2021 cycle. Back then, from the 2017 highs to the 2021 highs, the price did go above the 1.618 fib level. That is created a new all-time high back in early May 2021 and fell slightly short of the 2.618. This time around, if you were to account for some diminishing losses or diminishing returns, in that case the price could go, if you were to extrapolate that, slightly under the 1.618 but above the 1 Fibonacci. That is higher than the previous all-time high but lower than the 1.618 fib level, coming in around $4.91. If we were to go back to the website, this is the machine learning based price forecast for ADA using seasonal ARIMA, LSTM and XGBoost model trained on weekly price action. The non-euphoria bull run ceiling for that is the 1 standard deviation bull run ceiling for ADA in the next 6 months is between $1 and $2.72 towards the end of January 2026. If we get that much into the bull run, if we have that long into the bull run, the non-euphoria ceiling for ADA is at around $2.80. The euphoria ceiling, that is if there is a 2 standard deviation moves with a 95 percentile confidence, that the price ceiling, for example, for this week is at around $1.15, but as we move towards the end of the year and early 2026, that's at around $5.64. So that $5.60 is still in cards. That would be slightly higher than the 1.618, like ADA did back in 2021 from the 2017 cycle. So that is again a euphoria sustained euphoria for the next 6 months. If let's say the euphoria case is only for the 5 months of the 6 months, that would be towards the middle part of December of 2025. That euphoria ceiling is at around $4.70, slightly under the 1.618, which is at around $4.90. So that's the 2 standard deviation peak for ADA. Per the regression based model, the polynomial regression based fair value estimation, right now ADA is still undervalued in the larger scheme of things. This non-linear polynomial regression based model, whenever the prices are below the green line or close enough to the green line, like they were back in June of 2025 till about this week of August of 2025, that historically speaking has been a great entry point for ADA. Again, not financial advice. This model takes into consideration the bullish and the bearish phases of this cycle and the non-linear relationship for an altcoin with price and time, as the phases of market cycles kind of have that sine wave kind of a function. The fair value for ADA per this regression based model is at around $1.54. That is still per that model. The 1 standard deviation residual based ceiling is at around 81 cents. So that's an area of support. The opposite of 1 standard residual to the downside is the residual to the upside, and together between the yellow and the green line, the price stays about 68% of the time. And if it were to go to that 1 standard deviation ceiling to the upside, that regression based estimation is currently at around $3.30, but you can see this one has an upward bias. So if the price action stays that kind of in a bullish environment where at least it goes back to the fair value, then the upswing could potentially continue, and come December, that $3, what is $3 right now, could be close to that $5 target in that phase. The 2 standard deviation ceiling is all the way at around $6.60. Again, I wouldn't put too much weight into this because in the 2021 cycle, the prices barely made its way above the orange line. There is a good chance this time around the price go above the yellow line, but less than the orange line at that point in time, accounting for diminishing returns. So taking an average of the orange and the yellow line, that could be of some help. Right now, if you were to zoom in over here on this chart, the orange line ceiling is at around $6.50 roughly speaking, and yellow line is at around $3.25. If you add them together, it's at around $9.75, dividing it by 2. Roughly speaking, it's at around $4.50, close to the 1.618, but slightly under it. That is another way to forecast using these models. If we were to look at price color coded with risk levels, this is again taken out of that polynomial regression based fair value and the proportional and time adjusted distance between the price and the fair value. This model did help identify, historically speaking, some of the great times to DCA ADA. Right now it's still in that phase per this model. Currently the risk levels is only 12% or 0.12. Historically speaking, whenever the prices are in less than 10% risk, they have been, as identified by this live model, they have been an asymmetric buy zone. Opposite of this is again an intermediate level that ADA could potentially reach is between 0.5 to 0.8 risk. If that kind of environment is ahead of us, the $2.83, between that and about $4.15 or $4.40, if you were to go to all the way to 0.8 risk, that $4.50 is the upper ceiling per the regression based valuation. What remains an area of interest is this dotted red line, which is the 2 standard deviation residual drawn from the regression line. If that 2 standard deviation ceiling is reached, which at any point in time, right now it's looking at around $4.56. So that's again another area of confluence. The opposite of this is the bottom regression, which hasn't come into play right now for ADA, but come 2026, that dotted green line could be an area to look for whenever that middle part of the bear market is behind us, mid to late 2026. That is again just an estimation, not financial advice. If we were to go back to this is ADA, so this is the homepage of the website. If you were to go back to the time weighted average price based model, price did come close to the time weighted average price, which is this blue line, back in June. That was when the risk levels for accumulation were less than 0.2, especially whenever this is less than 0.2 over here. That has been a great time to DCA in April as well as in July of 2025. Right now the time weighted average price risk is 50%, still not as overheated as it was back in 2021. In this cycle in December 2024, the highest the risk levels went was almost 66% or 2/3 risk. We haven't gone that far along. Right now the time weighted average price is stabilizing at around 50 cents. Let's see how the price action kind of rallies the time weighted average price along with it. That's usually how the cycles go with respect to the time weighted average price. As you can see from 2020 in the bear market, the time weighted average price has a slightly lower bias. The bull market takes the time weighted average price back up, and wherever it kind of stabilizes and whenever the bear market kind of reaches that bear market price action reaches that time weighted average price below this blue line for high quality assets, that's where the accumulation phase exists. And if we were to try to extrapolate the timeline for this blue line to come into picture and be helpful, especially in the bear market accumulation, that would be sometime July-August 2026. Right now, as a confluence of the third risk-based model, which is the 20-week simple moving average price-based risk, the difference between the current price and the 20-week moving average price for ADA, and based on that risk levels currently at around 0.4, roughly speaking. In 2024 December, the risk level did go to 0.71, whereas in 2021 0.8 and almost 0.8 was the target for from that perspective. $1.80 would be a short to mid-term target for 20-week simple moving average based model. You can see that if you were to take Ethereum's example, for example, related to 20-week simple moving average, right now the risk is very much elevated at around 0.86. You can see the Ethereum's move from April 2025 when the time weighted the 20-week simple moving average price risk was around 5% or 0.05. From that we have come to the almost to the top of channel to 0.86. So again, if in that environment, in this environment per this model, that $4,900 is estimated as a peak for Ethereum before a pullback. So similarly, again, if that kind of a scenario happens for ADA, that doesn't mean that ADA has to top out at whatever eventual that 0.8 to 1 risk is at around $2, roughly speaking. It would just need a breather again, and as you move away from the top 5 cryptos by market cap, essentially outside of, let's say, Sol over here, everything below, they have very little say on what has to happen in the crypto market. That means their own individual 20-week moving average does not matter as much as, let's say, what Bitcoin or ETH, or for that matter BNB and Sol and XRP are doing on their own 20-week simple moving average based risk. Nonetheless, these models, again, for example, over here, ADA's risk level in 2021 peaked at around 93 cents, but that did not stop ADA to go to $3, almost 3x from that peak estimated, because back in February 2021 and till about May of 2021, Bitcoin and ETH were rallying. So potentially that matters more than the risk levels for ADA. Nonetheless, they do inform, especially a cool off period, or historically speaking, the analysis of high risk environment and the price action on those levels. Again, long story short, if there is a pullback in the market and if ADA has reached that $2 target before that, that could be a signal to kind of onset of a short distribution phase for ADA. All in all, if we were to take stock of all the individual risk-based model that we discussed, the DCA or the regression-based model, the time-weighted average price and the SMA risk-based model, weighted risk is almost 1/4 at this point, or 25%. The estimated bull run peak with a hypothesis that coincides with a weighted risk of about 0.95. The estimated bull run peak is at around $3.77, about a 4x from the current price. The 377 is somewhere between a midpoint of 1 and 1.618. Again, extrapolating from the last cycle, which ended between a midpoint of 1.618 and 2.618. It's not too outlandish to expect this cycle to end at around, for ADA, at price action between 1 and 1.618. With that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.